Good morning, good morning. How's it going, guys? Nice to have you on this Monday, February 24th, 2025. First of all, I want to thank all of you for the wonderful birthday wishes that you guys submitted my way over the weekend. Uh, the interactions I've had with you have just been so amazing, and I uh, uh, want to say that it just made my weekend. And I want to thank my wife for making my weekend really special as well. She went above and beyond this weekend to make my birthday special, and it definitely was very special. So I want to thank all of you for participating in submitting your birthday well wishes for me. It meant a lot, and it really touched my heart, and it was great to see some of you out there in internet land. All right, so let's get started. Yeah, it's the big 5-0. I've reached the big 5-0. I've got family members, older family members who are saying, "Welcome to the 50 Club." I don't know if I really like that, but I'll take it for what it is. Um, Greetings from Nigeria. How's it going? So, what do we got here? I wanted to look at the gold, silver, and the major currency pairs like we like to do. If you've been watching the episodes that we've been posting, then you would have been kept up to date with the moves of the big institutions. Okay, we track what the big banks are doing, what the big institutions, the ones that actually move price. We keep track of what they're doing, and that way we can trade alongside with them, time our entries, know exactly where our stop should be and our targets, and we do extremely well with this analysis and our trading techniques. And so today we're going to do a little bit of analysis for you. I'm going to show you how we get a basic sentiment of what's happening in the markets. If you look at my screens here, you'll see that I have 6 different time frames that I usually focus on. One of them is 12-month chart, 6-month chart. Then over here on the left, I put the monthly, because to me, monthly is the most important for what I do, monthly. But I also want to know what's happening with the large picture, okay? Because institutions think big time. They think long term and they think big moves, okay? So they're planning moves over months, over years, and that's why it's important for me to check on those charts, okay? Then we have the weekly underneath the monthly, because for me, monthly, weekly, some of the most important charts to be taking a look at. For entry, I like looking at the daily time frame, and to pinpoint an exact spot to get in to a position, 4 hour. And not just that, but the 4 hour is usually that time frame that gives me the earliest indication as to what the banks are doing. Are they shifting momentum? Were they once going upwards and now they're going downwards? Is there a reason why? Or in the overall picture, does it not really matter what's happening in the 4 hour time frame? Sometimes that is the case. So one of the most important things for me is to figure out the bias on each time frame, because we have multiple time frames, but we have to be able to determine what the path of price is. Okay, there's a journey that price is taking, and there's going to be a certain path that price is going to follow. And to determine what that path is, you need to look at each individual time frame and determine, is it bearish? Is it bullish? What do we expect based on it being bearish, bullish, or maybe it's not either one of those. Maybe it's just in a neutral phase. Maybe we're just waiting for it to play out because it's in a range and we need it to break out of that range. So I'm going to give you an idea for your analysis. I'm going to look at the charts. I'm going to look at the biases based on the institutional buying and selling and the trends or lack of trends that are in play on the chart. Okay. So here's gold. And I've talked about gold for some time. I think that on the higher time frames, we're definitely bullish. Okay. There's no doubt in my mind we're going higher. All right. But I do also recognize that, you know, when we look at price action here, what do we see? We see a lot of momentum that it's already taking place. It started in the 1800s and it's gone as high as, what are we, 2,900, give or take, right? So that's a lot of a bullish move. It's a major bullish move. And so now when we look at the CFTC data, what do we see? That they are nearing their maximum size. Okay, so when I look at longer term play, which is important, I see that they've been moving very aggressively high. And then now they're reaching near max size on their positions. That tells me that we probably don't want to be going in long, okay? It's not high odds to do that. Let's take a look at the latest gold positions, and you'll see that right now longs are 343 or 334, sorry. So they took a little bit of their profits on those long positions over the last week, but still super aggressive, okay? So maximum size, as you can see, I have it drawn out here on my daily time frame. Maximum size for longs is 408. So, you know, we're close to that. And so we have our projection here based on the CFTC data. It's something that we did on a previous episode on our YouTube channel where we were just focusing on gold. You should go back and take a look at that, how we got that projection. So this is all telling me be careful, okay? And you know when you're crossing the street, first it's red and then it's yellow. The yellow is that transition, right? Excuse me. When I look at the daily chart, for instance, that's what I see. I see yellow. Okay. It was green. Now it's yellow. Okay. It's in the in between. It's switching to something. Okay. It's very likely going to be switching to bearish. All right. Because of this circumstance. So it's yellow right now, but I believe soon it's going to be red. So remember, the daily time frame represents a short-term momentum, a short-term move, okay? Many hours, many days. That's what the daily time frame represents. So if it's in caution phase because it's about to switch to something else, I don't want to be thinking about going long gold for a short period of time. Do I want to go long gold during a very long period of time? Well, just because the 6 month is green, it means that's the circumstance right now. All right. Would I want to be going long for a very long time? Obviously not, with long positions near maximum size. So I would be avoiding that. Okay. Now, when we look at the monthly time frame, you know, is it bullish? Is it bearish? Yeah, it's bullish right now, obviously. Why? Because it's been coasting up, right? But we're about to hit our target. That target that was the CFTC projection target. So that means anytime soon, this momentum to the upside is going to die down and it's also going to reverse. So even though the charts are giving you clear bullish signals, unless you knew what was really taking place behind the scenes, you would think gold is going to continue going higher. Like, why would you not think it's going to go to 3,000 and 3,200? Why wouldn't you think that? There'd be no reason to think that it's going to go higher. And look at that. My image all this time has been covering. Well, you know what? I've been saying a lot and you've been getting a lot out of it anyways. Wow. Well, listen, hey, you could you could see now exactly what I was saying, okay? And there you go. All right. So monthly is bullish, yes. When you're looking at the charts, yes, it's bullish, sure. But it doesn't mean that you want to be going in long, okay? Um, so be very cautious is what I'm saying with gold, because eventually this is going to turn over. I don't see how it could play out any other way. The technicals are suggesting that soon this is going to have to give and price is going to drop, right? We're reaching near an area where once price gets up there, no, look, now it could even actually go higher because this CFTC original projection was based on the data at the time. They have since taken some profits on those positions, okay? As you can see, the longs had been reduced. You probably didn't see because my face was in the way. So let's do this. See? 343 down to 334. Okay, so they already took some profit. So now we're further away from that 408, which tells me that if they want, they can push price a little bit higher. But still, this is really, really overplayed here. They're going to have to take profits on their positions. And when we see that happen, there's going to be a move to the downside. So I'll be very careful with gold. Again, it looks beautiful. Everybody's talking about it. Everybody's going long, but it doesn't mean you should be going long. Okay. All right. Let's look at silver. What's happening with silver? So nice signs on silver. Okay. We have a bullish signal going off here on the daily time frame. Remember what daily time frame represents: short-term momentum to the upside. Okay. So first, let's start with the daily time frame, and then we're going to start working on the other time frames and to put things into perspective here. Okay. So you remember we had this area of supply here, and I had it labeled that this area of supply uh, uh, would be needing to be removed for there to open up the floodgates for a move higher. Okay. So supply would need to be removed in order for the chart to open up for a move higher. Now remember, the daily time frame represents short-term momentum. Now we have since broken through that area right here, and we've done it with some institutional buying down in this area. So this is pretty good, right, for a short-term move to the upside. Price is now coming down towards that area, so it's very likely that if it comes down a little bit further, we're going to see a rally form from that. So remember what I was saying with gold. When we look at the CFTC data, there is room for them to continue adding to their long positions, which means that they could fuel a move to the upside, all right? But this trip that they're going to take is very likely going to be short-lived. It's like having a little bit of gas in your tank, and you're just jumping on into the car onto the highway, and you're like, let's go, but you're running out of gas. Gas is going to run out very shortly. So you may think you're going to go very far, but it's not really going to go that far, because what's required to fuel the move, it's being burnt out. Okay. So short term, we have a situation where the charts are setting up for a move higher. But let's look at the longer term charts. Monthly time frame, it's looking pretty good, bullish. And in fact, we contacted an institutional buying area down here. So not only is it bullish, but we have institutional buying over a longer period of time that has taken place. Okay, so that is down here. So that relates to, let me just put my mouse here, down here. Okay, let's go back now. It doesn't really work now. But the point I'm trying to bring here is that's this area here. So significant buying came in to the market down here. Okay? It's played out. It's gone. Buying. Then down. Now we got short term. The short term is telling us, is the longer term, that the longer term buying that came into play back here, is it going to continue? If gold was reaching some, institutional demand, and they had over 100,000 that they could add to their longs for a move higher, this would interest me greatly for a move higher. It would. But because of circumstances, they're running out of gas. Once gold runs out of gas, this is going to run out of gas. All right, it's not going to shoot up like we'd expect in different circumstances. So going back to what I was showing you, let's stretch this back out again. Lovely. There you go. Monthly is bullish, but it was bullish. But let's look at the daily time frame. It's opening up, looking beautiful. But let's also look at what's happening with gold. When you compare the two and you see what's happening with gold, probably some bullish momentum, but probably not very long-lived, okay? So, but the chart's looking good. In fact, if gold was to drop and then build a nice foundation again and start rallying up. This chart's telling me I'm ready to go. They've got their suitcases packed. They've got the suitcases put inside the back of the truck. They got a full tank of gas and they're ready to go. They're just waiting for their partner to give them the signal. And their partner here is gold. Okay, let's look at the Dixie. A lot of people talking about the Dixie. So here's the situation with the Dixie. We got some supply that has recently come into play here, one here, again, a second test, and we see weakness. But this weakness is not really kicking in hard here. And there's good reason for that. And we're going to talk about that when we look at another chart. But remember here, over the longer period, okay, remember 6 month, what it represents? It represents longer term momentum, okay, over the very long term. Each candle represents 6 months of trading. So if there's a signal, that means this signal is going to play out over a very long term. Now, there was a signal here, okay? What was the signal? It was a bullish signal. What was it? An institutional supply area has been removed, okay? This institutional supply area was an area that was holding price down for a very long time. Very long time. And now it's just been removed intentionally. So what does that tell me? That tells me that over the very long term, there is a very strong chance that over time we're going to see the dollar get stronger. Okay. Now, I know you've heard stories of the dollar is about to get weaker, the dollar is collapsing, and all this stuff. I'm only telling you what they're doing. I see what they're doing. I have the institutional supply and demand zones that I've located, the buying and selling of the institutions that are the ones that actually move price, the ones that control the price in the markets. And I'm telling you, a massive area that used to be selling, they have removed it. Okay? They've taken it out. This area of selling was being used many, many times for many, 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 many years until just recently. And now they removed it. Why are they removing it? Well, because buying now is becoming the priority. Okay? When they remove a supply area, buying tends to become the priority. Sure, things can shift over the next 6 months to a year and a half. Sure. I'm just giving you the signs now. I'm giving you the indication because I'm seeing what's happening on the chart. And I'm just giving you a heads up of what I'm seeing here, okay? So in terms of the US dollar, we see over the very long term, supply being taken out. Short term, daily chart, yeah, we have bearishness. Why? Well, because a daily supply zone has been contacted. All right, let's just make it thicker. So daily, bearish. And so therefore you see the movement to the downside. Now, if there's going to be a shift in this bearishness, what would I be looking at? Well, obviously I'd be looking at the 4-hour time frame. And what do we see? We see price has been heading lower. Okay. So if price was going to shift to the upside, obviously we would need to be watching for 4-hour time frame to break out of this bearish structure to the downside. But as long as this structure holds, we are expecting some short-term momentum to the downside. Okay, very good. Let's look at the Aussie. Remember what I showed you with the Aussie last time? Okay. Remember I told you how on the weekly time frame we had demand in play? You remember that? And what does weekly time frame represent? Medium-term momentum. Okay. Monthly is long-term momentum. Weekly is medium-term momentum. Daily is short-term momentum. So medium-term momentum came into play here on the weekly time frame, and therefore we can see over many weeks there's been a push to the upside. So much so that the daily area of supply that was contacted here has since been removed, and so that this is opening up for a move higher. Okay, 4-hour structure to the upside. Okay, why? Because of the weekly area of demand that came into play here. So medium-term demand comes into play. Short-term bullish structures are created. Okay, so you see how this works? And so where is this short-term structure heading price into? Well, we've got this here. Remember, I was pointing this out to you in our last session. We have institutional supply sitting right here on the monthly time frame. And remember, what does the monthly time frame mean? Long-term momentum. So we got supply just above price. We are watching for a move into that area of supply. And once that area of supply gets contacted, guess what we are expecting? A long-term move to the downside. So what do you think is going to be our first indication that this long-term move to the downside is going to take place? Looking at lower time frame bullish structures shifting into bearish structures, right? So for instance, let's take a look at this chart here. And, we got a little bit higher to go, right? But let's just say we have this structure maintaining itself all the way up until that area of supply gets contacted. Well, what do you think is going to happen with price? Well, we'd expect there to be a move up and then a break of this structure, okay? And that's going to send things into neutral territory, okay? So it's going to be from bullish to neutral, and we'll be watching price action as it switches from neutral to bearish, okay? At this point, what will happen is you'll have structures being built to the downside, and institutional supply zones will be created, and then price will rally up to institutional supply zones, and then we'll see the drop. And those will be our institutional trade signals that we're going to be looking for. And when they take place, I will post them in the forum and share them with members. So this is how the markets work. If you're not aware that the markets move like this, then whatever you're looking at has nothing to do with how the markets actually work. They may give you some indication as to what's taking place, but the reality is this is why the market is doing what it's doing. It's rallying up because there's institutional buying taking place over the medium term, which is pushing price to the upside. Medium term means they're going to continue buying over the next few weeks. And this is what's been taking place here, as you can see. All right. I tell you it before it happens. The reason being is because I want you to see with your own eyes that this is the reality of what's going on here. This is why I tell you before it happens, so that as it unfolds, you can see it's happening for that reason. Okay. So I'm watching for more momentum to the upside here until that supply gets contacted. And then I suspect what will happen is that there will be that shift in momentum. Okay. All right. Let's take a look at the euro. This one's an interesting one. So what makes this one really interesting is that we don't have any significant areas of supply for there to be a reversal from. We do have them on the pound. But on this chart, we don't. So it makes it difficult to time an entry. And this is not one that I'd want to be trading right now, because when we look at the charts, for instance, let me show you the monthly chart time frame. When I look at this monthly time frame, this is what I see. Blue. Blue means neutral. That means over the long term, it could go up, it could go down, okay? Yeah, there is a slight bearish bias. Why is there a slight bearish bias? Well, because we have supply in play, okay? Supply came into play here, 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 and then eventually drop price. So yeah, there is a slight bearish bias, but then we got price basing, and now we're getting a bullish candle. So could it rally a little bit higher? Sure, it could. But there's no clear indication, just based on the monthly time frame, what price should do right now. So then we have to go to the lower time frames, right? Because monthly time frames telling us supply is in play, so longer term, we should see a move to the downside. Okay, we got that. Now it's pausing. Now what? We need to look at the lower time frame charts. Okay, so when we look at the lower time frame charts, what do we see? We look at, for instance, the daily time frame, and caution. Caution. Why? There's nothing really happening here. If you take a look at price, you can see all throughout here, there's nothing really happening. There's no supply coming into play. You'll also notice that there's no descending structures in play. Okay, see that? You see how there's no descending structures here in play? All right, so it's sideways, coasting sideways. There's not even a range here to be basing price on. So it's not like there's supply here, and it's not like there's demand down here. If there was a range, then we would just wait for the range to break out, and then we'd have our direction. But that's not the case right here. So I am staying clear of this one right now. I had a short on the euro, and I shorted somewhere up at the top here, and then covered down below, and I made a nice profit on that. But uh, then I changed my bias, and I exited my position because of the Aussie that was coming into play with some demand. It was a clear indication that there was going to be a push to the upside, and I didn't want to be sitting in a position when that took place. So I got out. Now I'm just waiting and waiting for things to become a little bit clearer. When I look at the pound, okay, we rallied up into supply. I was telling members that that would be a good area for a short, but because of the other things that were taking place in the markets, I had to take it into consideration. I saw demand coming into play, which was going to put pressure on the pound to the upside. So I did not look for a signal. And the interesting thing is, we were watching the 4-hour time frame, because remember, when we're looking for an entry into a position based on an area of interest, like this supply area, we are waiting for this bullish structure to shift to bearish, and it did not take place. Okay, it could have taken place. Okay, it was very close to taking place, but it did not take place. And one thing that we've learned over the years studying the markets is that if a signal doesn't present itself, then there's no signal. And if there's no signal, then that's usually meaning that the banks are not planning on doing what you suspected they might be doing. And so the signal didn't take place, and guess what? Price eventually went higher. So it was very interesting how that played out. Okay, you see, price eventually went higher. So we're waiting and seeing because, as I mentioned, when you look at some of the pairs, they're coming very close to hitting some higher time frame zones. And so, like the Aussie US dollar, and there's other ones that I'll show you when we get there. So there's likely going to be a reversal soon. Not just yet, but soon. I'd like to see where price is with the pound when that does happen, because there is a nice area of supply up above, but we're quite far away from that area. So I'm not sure if we're going to reach that area of supply or not, okay? So let's look at the Kiwi. Remember that area of demand that we were talking about down here? Okay, it came into play just like the Aussie. And when it came into play, medium-term buying started, all right? So it's been somewhat weak, nothing very aggressive. The other thing I'll point out is that we don't have supply here on the higher time frame, but price is going to reverse when the other ones reverse, period, okay? The Aussie and the Kiwi played a significant role in telling us and signaling to us that the euro was going to rally and the pound was going to rally, and that's what gave us that foresight for that move that was going to come, and it did take place. But it's not going to be this chart that's going to indicate when the move to the downside is going to take place. I'll tell you that much. So there's not much to see here. I'd be focusing more on the Aussie at this point based on that area of supply that we mentioned, okay? So going back here to the Aussie, that's the monthly area of supply that I'm talking about, okay? When we go to the US CAD, look what we see, okay? Remember the US CAD? What did we have? We had supply coming into play. So when supply comes into play, it pushes price to the downside. Now, this is a monthly time frame. This is a long-term move, right? And so we've had so far a move to the downside, 2 solid weeks of a move to the downside. Now a pause, another pause, 2 other weeks, okay, or a week and 1 day. But look what we have here, guys. Pay attention to this because we have an institutional demand zone here on the monthly time frame, and we are heading towards that. Okay, this is like the opposite of what we see with the Aussie. Aussie had supply, this one has demand, and it makes complete sense because they're opposite of each other. So price is selling, and it is coming closer and closer and closer to this area of demand. But take a look here. When we look at the 4 hour time frame, do we have a nice structure to the downside? Not really. Remember how I was telling you we'd like to get an early indication of that shift when institutional zones come into play? Well, we need nice structures on the lower time frame to indicate those shifts. Nothing really good here. We'll find a signal nonetheless, and I'll post it for members when that takes place. So I'm watching the monthly time frame for it to come into contact with that demand, and then something big is likely going to happen. Because remember what we were talking about on the dollar? Take a look at the 6 month chart. Remember what I told you about the 6 month chart, what it represents over the very long term, right? Over the very long term, guys. What we see here is a bullish signal because supply area that again was contacted several times in the past and held has been taken out. So what the banks were focused on before, they're not focused on. They were focused on holding an area of supply. Now they just demolished that area of supply, which is telling me that over the very long term, we could see a move to the upside. And this is very interesting. Why? Because we're just about to come into a monthly demand zone, which means what? Long-term move to the upside. Could this monthly demand zone be the exact turning point where price will drop into it, reverse, and then head higher for a much more sustained longer term? Possibly. Possibly. I think there are very good odds of that. I think there are very good indications of that and very good odds of that. The only thing we'd have to be paying attention to is the CFTC data because they're not going to make that happen without the data being aligned with that. And when we look at the US CAD CFTC data, what do we see? We're at 165. What's their maximum? 219. Did we reach there recently? Yeah, pretty much. Back in November and December, okay? When supply was being contacted, all right? So they've already maxed out their longs as supply was being contacted. They took profits on those positions, which is what's fueling this move to the downside. 165 to 219, there's some room for them to add, okay? And if price drops even further down into that monthly demand zone, I wouldn't be surprised to see that long position drop even further. So once it gets into demand, could they start refueling and putting more into their long positions? I'd be watching for that, okay? I think this is a very significant move that's about to set up here. And US Swiss, not much happening here. We contacted demand, which is what fueled a move to the upside. And other than that, there's really not much to see here. So we're going to skip through that. US dollar, Japanese yen, here's the one of interest for me. We recently took a long trade on this one. We profited. Timed it quite nicely from down here to up here, exited right before it reversed. And they say you can't time the market. So how did we know that? Well, it was because a supply area was being contacted, not very difficult, okay? Supply area was being contacted. And what do we know? That the daily chart represents short-term momentum to the downside. So daily supply got contacted and short-term momentum to the downside. And look what we just recently created, another area of supply. So if we get a short-term move to the upside, it's going to run right into supply, which is going to tell me that we'll probably get more short-term momentum to the downside when that gets contacted. The only thing here is that on the higher time frame, we have a demand zone that's being contacted, okay? And we were looking at the dollar and we had the signals that higher time frame supply is being removed, which is opening up a move for upwards momentum. When is that going to kick in? Well, US CAD, we saw it just needs to drop a little bit further until demand comes into play. The long signal, I'd have to see this area be removed if I'm going to be interested, right? Because if price was to rally up into this area, okay, as it's holding demand, and if the US CAD came into its demand, if it rallied up, should I be thinking that the daily area of supply should be used for a short-term move to the downside? Logic would tell you probably not. Why? Because we have things indicating that momentum to the upside is likely going to overtake it. So I'd be waiting to see that daily area of supply be taken out, because I want to know that the banks are not focused on short-term selling. I want to know that they're focused on short-term buying, which could lead to medium-term buying, which could lead to longer-term buying. You know what I'm saying? Yeah, I hope you do. All right, guys. I think we're good to go. I think I shared enough with you guys, enough to give you a good indication of what you should be watching for this week. And pay attention to the things that I just pointed out, okay? I am pointing out these things because I want you to learn. I want you to see the reality of what's happening in the markets. I want you to give up all those EMAs and Bollinger Bands and all that stuff and start really examining the reality of the market and give you a better indication of what's taking place, okay? All right, that's it. Thanks again. Thanks for joining me. We'll talk to you guys soon. Take care.